Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, September 7th, first day back from a 3-day weekend. Markets will kind of seem to be a little bit on snooze today, but there was definitely some areas that performed a bit better that were strong. So we'll go over those areas. We'll also go over a couple of the weak areas. First things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only. You can read the whole risk disclaimer here. And also, if the screen is a little bit blurry, it's just because YouTube takes a little while to render the high definition version of the video. So let's get into the index performance first. We always review that. Always start with the bigger picture, and then talk about what was in favor for the day and what wasn't. Well, you can see from the top line here, S&P was down on the day, and a little bit of underperformance there, as well as the small caps were hit a little bit more. They were down about 0.75%. The mid caps were actually down more than that. They finished down over 1% for the day. So that was weak. Micro caps were also down about 0.5%. Yields were higher, so that I thought that was noticeable right in the beginning of the day. TLT was down just about, well, almost 1% for the day. That means yields went higher. That didn't really affect too much of the growth stocks. In fact, I didn't even see, I was looking more towards the banks at the beginning of the day, and they didn't really move too much on that. So it was something that I'll be watching. I think that the banks had to get a little bit closer. I don't like how the banks are kind of completely setting up on the through the market web's value areas. I'll discuss what I mean in just a second, but they were kind of unaffected. It was kind of weird. Growth stocks were basically unaffected by the move in yields, and so were the banks. So they just didn't seem to kind of care too much. In terms of what did underperform, you could see that the market breadth was particularly weak today. We can bring this up over here too, just to kind of go over the raw numbers. But for the Dow, there's 25 decliners, 5 advancers. S&P, the 411 decliners and 92 advancers, and in the Nasdaq, 1794 decliners versus 1100 advancers. That's kind of why I kind of just backed off trading for the day. It just was more kind of watching, I felt like, most of the day versus trading. So before we get into the sectors, let's just go over the technicals. Number one, S&P, right? Kind of starting to curl back in a little bit, closed, for the first day just below the 5-period moving average. I think that's the first day that's happened maybe since your closest to was basically on 826, and then of course this candle here that was on 817. Also, the other thing to note was just the VIX was pretty strong most of the day, and basically closed close to the high of the day. The high of the day was around like 10 o'clock this morning, just after 10 o'clock, and then it kind of declined. And then it picked up the last hour of the day. You could see here again, top is for just for the VIX for the S&P. VXN is for the VIX for the Qs, and RVX is the VIX for the IWM. But if you just want to concentrate on that, on the VIX, so up 10% for the day. So again, we're kind of in this middle of the month, or almost in the middle of the month. So I don't know, in terms of expectations, I think at this point everybody is kind of in the camp of thinking, oh, September's a tough month, and there's usually volatility. So, as I said earlier today, sometimes these things are a self-fulfilling prophecy. It's like, oh, you want weakness? We'll get a little bit of weakness, right? And then everybody kind of starts to believe the same thing. People don't add a lot of risk, and they just kind of sit on their hands a little bit. So that's what I mean in terms of self-fulfilling prophecy. Gold, silver, geez, look at how much those things were down, right? I talked about on Friday, when so I'm sorry. So let me finish with the S&P, jumping around here a little bit. So what I always look at it, especially in the beginning of the week, but really the 1-hour chart just kind of gives me a heads up. I do a decent amount of short-term trading here. My swing trades range from duration. Some of my swing trades are long-term swing trades. Some of them are like mid-term, Midterm meaning like a week to a couple weeks, and some of them are just a couple days. For example, I put on a trade on Friday in Tandem that happened to get lucky with a mid cap announcement inclusion, and so it's off the books in one day. So that said, and every once in a while I'll do a little bit of day trading too. But I like to look at the 1 hour chart because it gives me kind of just a short term view in terms of if something is changing directions a little bit. So yeah, it's kind of the first time, as I mentioned. With the daily chart, it's the first time that the S&P has gone below the 5 period moving average, which is really great. The 5 period moving average for just telling you if price is above the short-term trend and trending, right? Which it's been that way for a couple weeks and now starting to kind of come in a little bit. So I don't necessarily, I'm not really favoring that we continue to go down further, or I'm just not making a prediction, but I could tell you what I do see in the charts is that we're basically back to the lower range of where we were last Tuesday, last Wednesday. This range has kind of been frustrating people because people want volatility. Either a bigger move to the upside or they want a bigger action to the downside. Sometimes when we don't go when we just go sideways, people are like making up reasons and so forth. Like, oh, well, we're going to get volatility or we're going to get a bit, sometimes we get chop, right? And it's best when the overall indices chop a bit. In my opinion, it's best not to overtrade, right? There doesn't always have to be a trade. It doesn't always have to be a trade to the downside. It doesn't always have to be a trade to the upside. When there's momentum in the market, obviously I want to press down on the accelerator like we had the last couple weeks. And when things slow down a little bit, I want to slow down too, right? I can't force, I don't want to force trades into a choppy market. So bottom line here with this chart is I do see price, besides it getting to the lower range of where we were last week, we are now below value, new value area for the week. So below 45.20 or in this range tells me just to kind of back off a little bit with risk, which is kind of what I have been doing the last couple of days. I've been a net seller the last couple of days and was certainly a net seller. Some winners and some losers, and I'll go over those in a second. But yeah, it's also the first time that we've been this 200 period moving average. Right, it's the first time that we've been below that since back in here too. So yeah, I would say a little bit of caution with these markets and the VIX going up 10%. Qs are going to be a healthier picture. Right, they were kind of unfazed. They were up for the day. Nothing really damaging there in the technicals. The small caps did look weak, like I said, throughout the session. They tried to come back here a little bit, and they couldn't get out of value. So they're in value for the week. I could see them going down to like 225, the IWM for the week. All right, and we talked about bonds. We'll definitely be keeping an eye on them. You could see how they ended for the session, right? Usually, and again, it didn't happen today. So I think that's pretty. I don't want to say lucky, but if you were long some growth names and you're worried about yields going up, you definitely have the opportunity to take some targets in some things and to take some names off, because as of now, yields moving higher today really didn't affect any of that stuff. So sometimes when that happens, you kind of get a get out of jail free card for the day and say, hey, I can get out of stuff, and then if I want to watch a little bit, rather than do more trading, you can certainly do that. But yeah, I think that'll be on the watch for the rest of the week to see what these yields do. Let's get into some sectors. So first, the Chinese internet names. They were the best performing group. They were up 4% for the day. So I start with the weekly chart here. Have we made a bottom here in the Chinese internet names? I don't have the answer to that question, but we've bounced pretty decently off that lower VPOC. We actually went outside of value and went ahead and got there and got this VPOC taken care of. And since then, the bounce has been on in some of these Chinese internet names. So I still think it's a very risky group, right? Because there is there's been headline after headline about clamping down on businesses that are consumer facing over in China, and we just don't know. That's under a completely different regime than what we're used to dealing with in the U.S. So I don't know if that shakeout and the crackdowns are basically done. But for now, there's some levels to trade against. So I think you kind of have to manage if you're going to venture into these waters, into some of these names, position size is very important. But I did put on a position. I put on a position last week. This is in the TTG trend portfolio where I decided to stick this into the TTG trend portfolio at a 3% weight of the portfolio. I just think at this point it's doing something different. So what have I done here the last couple months? While watching these Chinese internet names go down, right? I've kind of waited for the turn. Right, so this looks like an inverted head and shoulders to me. There's some support at 52. So if we come back and we check 52 and then we start falling back, I'll be out of that trade. Right, so basically 52 is my major level to watch here. Right, and maybe we could see a retracement up to 59. And again, I don't have to stay married to this trade, but I think right now, just looking at the charts, the retracement is on. So where is this thing going to retrace back up to? I see 50. I could see 59, right, in terms of the overall group. Now, the other thing that you could do, notice there's a version point of control on the 1-hour chart too. So again, it's a risky group. If I haven't said that enough, I want to say it again. It's riskier than dealing with U.S. names, right, because of the regulatory risk and any of the unknowns. If you're looking for single names, one thing that I noticed today was JD got back above the 200-day moving average. Now, I don't think that this is going to be an easy trade because you got a lot of overhead supply here. You got that VPOC sitting up there at 84.70. There's going to be a bunch of them on the 1-hour chart too. But if you wanted to say, hey, I'm going to be long versus the 200-day moving average or $80 if you want a little bit more tolerance, that's one way to play it. And it is. Back above the 200-day moving average. I got comments today. I posted a chart on this. Oh, when this fund manager stops buying. So first of all, the fund manager that they're talking about is very, very small in terms of what they're buying. Right? I get comments all the time about what Cathie Wood is doing. Listen, I'm happy for Cathie Wood, and she has a fund and she's doing well in that fund. But her buying and selling is not enough to move the needle. In terms of what goes on in the Chinese markets, buying 60,000 shares or something. So anyway, without going off tangent, just be careful of that. Everybody's always looking for a story about why a group is going up or a group is going down. I could tell you it really doesn't make much. What she's doing in her fund isn't going to move the Chinese market, right? I'm more worried about the regulation that goes on there. Right, there are many, many other funds that are much bigger than that fund. So keep that in mind. Put things in perspective. All right. So anyway, that's one bright spot I wanted to cover in the area. Again, I wait for these things to kind of put into to at least put in some type of a tradable bottom, and then I look. Right. I never try to get the absolute bottom. I think that's a fool's game. People like to play the fool's game where they like to figure out buy the falling knife rather than just wait until some buyers wait until there's evidence that there's buying that's going on. All right, and also the Chinese Internet ETF. What did I say that they brought in? I think it was this week. So let's bring up my my Twitter from earlier. For the week, whoops, I'm going back too far. Almost $1 billion the fund brought in, right? So again, a decent amount, almost $1 billion last week of inflows, and that's been going on for the last few weeks. Some other groups to go over, but again, I spent some time talking about the leaders. What do I want to start with next? Yeah, there really wasn't a lot of other groups that did that great. There was a lot of small cap momentum, like a lot of the pump and dump stocks. The names that are around ten bucks. There's a lot of that going on this morning, which I kind of just move away from and don't look at. The industrials were particularly weak. This kind of got me shaken out of a couple of positions. So let me go over to my trades for the day, and we'll go through a couple of these things. But again, I like to go over not just the winners but the losers too. And this is why, like, I took a target in Deere on Friday. Even though it was a slim target, I mentioned a lot that I like to get a small target in first for profits, and I got that first target in, and I was looking for a breakout in this thing. Right, so a push higher, and there's no follow through after this candle, so I'm out, right? Because it's not doing what I want. I don't know now if this is going to fill down here to the bottom of value, but the whole trade was looking for a breakout in Deere. Once I see something like this, then I have to reassess. I don't want to stay married to the position and protect my ego that I have a loser. No, it's not doing what I wanted it to do, so I'm out. Reassess. All right, so that was the one trade, and I got out of some other material exposure too. I was in OLN, which was another name that I hit one target in. Try to be patient with it, but I'd rather be out for a small loser, and just be on to the next things. All right, so those are a couple things. I also got a little bit lucky with Home Depot. There was a bunch of things that were moving right around the first 10 minutes of the day. We see that sometimes. Sometimes there's these fake moves in the first 10 minutes. So I was able to get out of Home Depot, having a limit order out. Tandem worked beautifully. This was a trade that I had on. I just decided that if I didn't see that we hit this virgin point of control, then I may have stuck in it, or perhaps I should have stayed the last 15% of the order in. I may decide to go back in this name. It did handle that VPOC very well. We'll see if it kind of comes back and backs and fills. I'll be back in it. But this worked really well. This was a trade that we just put on Friday. So nice one-day trade and out of this one. Netflix, more gains in this one. Again, just continues to work well. I always get this question in the trading room. People like to kind of take out their pencil and say, in their calculator and say, oh, look at the RSI is an 85, right? That's overbought. Well, that's what happens for a name to break out of a range, right? You want to see strong buying. So I see this. I think the RSI indicator is one of the most over. It's used incorrectly a lot, right? People think, oh, geez, 85, that's way overbought. I want to fade that, right? I would not fade Netflix. The strength, you have to realize that Netflix has been going sideways for about a year and a half, right? Embrace the breakout, right? Now that it's breaking out, now it's doing something different, right? So I always will be on the side of going on for a name that's been going sideways for over a year and a half, breaks out of that range. I will always go and try with the breakout, right? So don't get discouraged that it's an 85 RSI. Now, if you don't want to start a position here, I wouldn't blame you, because it is a bit overbought and probably needs a little bit of consolidation. So it's funny because one of the things that I said last night, I tweeted out a chart of Netflix and I said, hey, I'm actually rooting for. I'm in the last portion of a trade and I'm rooting for a little bit of consolidation, right? And somebody said, oh, you thought it was supposed to move down today, and I'm like, no, that's not what I said at all. I just said, hey, I'm actually hoping for this thing to settle down a little bit. Then I can kind of roll. I was in a call spread position, right? Then I can roll that position out a little bit. But I didn't. I decided not to roll it yet. I just think that this market, we might see a little bit of volatility. This is what my gut is telling me. But hey, this was a really nice trade. 1640, paid $5 for this just in the middle of last week. So really nice trade here. And yeah, I will be going in the direction of the trend now, and I will be looking to put on another trend. But again, don't let something like the RSI getting overbought. You want that to happen, right? If you are playing a trade directionally, you actually want the name to get a little bit overbought. What does that mean? It means that funds are buying the name, right? So what? You're upset that they're buying it too much? Right? You don't think that, so here's another example. I had to argue with people about this one, right? When Upstart broke out, right? And here, oh, I want to short this thing. Why do you want to short it? Oh, it's overbought. The RSI is overbought, right? So where'd the RSI get to in this one? Right? About the same thing, 82, 83, 84, right? Oh, it's overbought. I'm going to sell it. I'm going to short it, right? And look at what this thing has done. That was at 200 when it was overbought. Where is it now? 262. I'm going to short it. Really? Okay, go for it. Right? So that's institutional buying that goes on. Right? And I did buy this for the TTG trend portfolio. So again, look at where I bought this thing. Right. So again, I like to show these things as examples. Where's the TTG portfolio? Now, I did not put this in as a big weight, right? But I put this thing in Upstart. Look how late I put this thing in, right? The 18th, right in here, when everybody was telling me that they want to short it. Oh, this is a great opportunity to short, right? So I put it on this day, even the wrong day, 8:18, right? And bumming the next day. We'll look at it now, right? 210 is up to 262, just a monster, right? So, again, going with the direction of the trend, realizing that there's something different going on here, big earnings gap, and tons of follow through. You could see the volume accumulation, and this is a nice move. And if I want to, I can now take some off the table in terms of taking profits. And by the way, if these concepts are new to you, right, I always talk about books to read. I mention some of these books, and sometimes people just goes in one ear and out the other. And then the next time something goes up, people are looking to short that too. But Trend Trading by Michael Covell, if you haven't read that book, it will really kind of, I think help your trading a lot with being on the right side of the market. So that's a wonderful book. Turtle Traders is a nice, easy book to read. It is really a fascinating book to read, and like I said, extremely easy to read. It's more of a story than anything else. So that's called The Turtle Traders. That's also by Cobell. Those two books really kind of helped me immensely, knowing that you could basically just follow the trend and weed out all the new, try to weed out all the news, right? And trade with much less emotion and wait for signals rather than, emotion. All right, so those are a couple things. The video is already 20 minutes long, as I tend to ramble on a little bit. I liked the progress that was made in Disney. This is a trade that I put on about a week ago. I wanted to see I thought, if you've been watching my videos, I said it wouldn't bother me if this thing came in and back-tested with a nice hammer bar. Let's see if it can get out of range. So like I said, I'm holding the last portion of a trade. I've already taken enough targets in this one, but I did not take any targets today in it. What also had some nice kind of sticking with this theme, not just the streaming names, but names like DraftKings had a real nice day. So again, I've talked about DraftKings a few times. We now have an event coming up on Thursday. That event is football season. So again, buy the rumor, sell the news, right? That works over and over in trading. This name made a real nice move today. So hit a target here. My first target was this VPOC, right? And it looks like we just kind of ran this over. So that's great. I would love to hold on to this trade for a couple more days with possibly an upside target all the way at $69. But that's pretty ambitious, but we'll see how it goes for the next couple days. Also, Penn was strong today too. If you're looking for something as a catch-up, this just got out of this range on the 1 hour chart. and looks pretty good to me. Again, a lot of retracement that could happen here in the next couple days if the buy the rumor, sell the news kind of continues. Remember, we just have one game on Thursday, so it could even be a trade to kind of hold into the weekend. All right. Also, the casinos were strong today too. Similar looking stuff here. Caesars was strong. Las Vegas Sands was strong. Another name that I've been playing a little bit here and there is this IGT. Right. Nice consolidation. I played this about a week and a half ago. Took profits, and then I noticed today that this thing was starting to make a nice bullish engulfing candle. So that is a new trade for me today. And and then like I said, I got out of some things. I had a really nice position on Friday in options in Nvidia, and I moved the option position over to some stock. I just decided that it didn't have enough momentum for me. So for now, it looks like just an inside day, so maybe something to kind of revisit. What else did I want to talk about? Apple. How could I forget that one? Another one where I was looking for the event date for the iPhone this weekend and I couldn't find it. I've been long Apple since this break higher. I even felt like I chased this day, right? And I've had to be patient with this thing. So got my first target, actually two targets today in Apple, one at 155. Today they formally announced the iPhone date, which is the 14th. Again, somebody on Twitter, all wise guys on Twitter. Oh well, they're not going to announce anything big. Da, 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 da. What are they going to announce? Who cares what they announce? The trade is always buy the rumor, sell the news. I'm not looking to hold this to the event day. I'm looking to hold it in anticipation of what they're going to say, right? And I will take this trade off before that event occurs, right? Again, buy the rumor, sell the news. 157, and you can see this thing moved pretty nicely today. And let's hope it continues to trend. What else do I have on my list? We already talked about Netflix. Tesla, how could I forget you? Tesla, I was complaining about Tesla this weekend about how tricky this thing has been. Well, finally, kind of gotten out of this range of the VPOC. Notice that we took this thing out last week, sideways, sideways, sideways. Try to explore a higher range, couldn't really do it. So first time that we're now kind of out of this range. So I did put on a little bit of a trade. Some of these moves, I will tell you, speaking of tricky, it's very difficult, right? We see option activity every single day in Tesla, right? And sometimes they're right, sometimes they're wrong, right? But if you didn't jump in on the first 5-minute candle, it's tough because, and if you're trading options, the implied volatility is high. So if by chance this thing comes in, your calls get sunk 20 minutes later. So I just waited. I didn't catch it on the first 5 minutes, even though we saw a plethora of option activity. And I said, let's see if it can kind of hold in here. So I'm now long some call spreads in Tesla now that it's out of this range. If it comes in a little bit, maybe I add to that position and test if we do get some more volatility or a little bit of volatility this week. But what I do like here about Tesla is I don't see anything right in front of it. Right, 787. Now that it is out of value, right, in a thin value area, so I'm looking for this thing to maybe go up to 764, and then if that happens, then I'll roll a position and possibly look for more because you just don't have much on the 1 hour and the daily, which is good, right? Which is a good thing if this thing wants to possibly get back to where it was months ago. All right. We talked about the gaming stocks, talked about the Chinese internet stocks. INMD is another name that just continues some of these medical device companies up another 1.5% and out of this consolidation. Again, continues to track above here. So I would say stick with these names. Look for any kind of dips in these names to kind of add to positions because, man, some of these medical device companies stocks are super, super strong. Any other trades that I wanted to mention here? I mentioned here I knew I wanted to come back to something. Yeah, so here's Morgan Stanley. So for now, just going to have an alert set. It didn't do it today. Sometimes you take shots on some names or some groups to see if they can push. I'm watching this Morgan Stanley and I'm watching Goldman. Right? Again, they just may not be ready yet, but the chart looks the charts look pretty damn good in them. All right, guys, have a great night, and I'll see you tomorrow.